Investors being pounded by presidential tweets aren't the only ones getting worried about a potential recession here in the U.S. A brand new survey from Realtor.com finds many potential home buyers are gearing up for an economic downturn. Let's talk about it. In the interview you'll see first here on Yahoo Finance with George Ratiu, senior economist at Realtor.com. George, good to see you. A striking survey here. Of note to me is that 36% of those polled see a recession in 2020. That's a pretty big number.
You're right, Brian, and good morning. It's interesting partly because we ran this survey at Realtor.com about March, so earlier in the spring, and at the time, only about 30% saw a recession coming in 2020. And interestingly, just as importantly, we are seeing, at least economically, so far through the first half of the year, the U.S. economy has done well. Employment trends have been positive, so have been wages. So it seems that for buyers specifically, all the news about obviously trade wars, the Brexit, the concerns over a possible European recessions are beginning to hit home and simply compound what they're finding in the market.
What about those low interest rates? I thought low interest rates from the Federal Reserve were going to unleash a housing boom in this country later this year.
Well, the interest rates are certainly helping, to be honest, but at the same time, what's happening, buyers are simply running into a wall. There's not enough inventory. Based on data we collect, obviously, every month on inventory at Realtor.com, what we're finding is that inventory under $200,000 in July declined by 10%. Whereas inventory of homes for sale at $750,000 and above increased close to 7%. So what buyers are facing, even though they're seeing interest rates around 3.55, there's simply not enough product for them to purchase, and that shows up.
George, if housing sounds like it could fall off the cliff in the back half of the year, what does that mean for the economy?
Well, so right now, for me, the tension seems to be between consumers who are certainly still somewhat optimistic. Obviously, they are expecting something to happen, and the corporate sector, which is a lot more forward-looking. So what we're seeing is capital markets, financial markets, corporate sector getting a lot more nervous, and I think that is driving some of the pessimism. Interestingly, in the same survey, we asked consumers, how did the last recession impact your feelings about housing? And what we found is, especially for buyers, about 44% said that for them, they are actually more optimistic about housing. So it's clearly a situation in which consumers are trying to read the tea leaves as much as anyone else, but obviously the mood has darkened a little bit.
George, real quickly before we let you go, we've made put a lot of focus here on millennials getting into the housing market for the first time. What's happening within Generation X? I feel as that is a crowd that gets left out of the discussion, but they're out there buying homes maybe.
Well, Brian, that's a very good question, and I'm glad you asked, because Gen X is a very active generation. In fact, they are right now in sort of the midpoint of their careers. A lot of them are having leadership positions. They have accumulated some wealth. Yeah, they got hit hard in the last housing downturn, but for a lot of them, the rebound over the last decade has actually been good news, and they are really moving into the trade-up homes right now. And so, in fact, they're still making up the second largest share of mortgage originations in 2019. So they're very active despite being a little bit overshadowed by obviously the larger millennial group.